Welcome to Talk Tickers. We're the place you come to really understand what's happening inside those crucial earnings calls.
And today we're digging into Electronic Arts EA. Their Q4 and full fiscal year 2025 results just dropped.
Right. And the overall takeaway seems pretty positive. A strong finish to the year, even if the full year was a little mixed.
Definitely a strong Q4. It beat expectations. Full year net bookings were actually down just slightly, about 1%, landing at $7.36 billion.
Okay, down 1% for the year. But Q4 itself?
Q4 was the bright spot. Net bookings jumped 8%, hitting $1.88 billion. A nice rebound there.
So what fueled that Q4 strength? Any particular standouts?
Oh, yeah. EA Sports FC, their big football title, really bounced back. Double-digit engagement growth after that January update they pushed out.
Oh, okay. I remember hearing about some softness there earlier.
Exactly. And their American football games, Madden and the college game together, they pulled in over $1 billion in net bookings. That's up over 70% for the year. Just massive.
70%. Wow. Okay, what else?
The Sims had a great quarter, too. Over 30% net bookings growth in Q4.
Really? The Sims is still going that strong?
Apparently so. Best Q4 ever for the franchise, they said. And they had a new IP, Split Fiction, which kind of came out of nowhere and sold nearly 4 million units, way above what they expected.
Split Fiction. Okay, surprise hit. So looking forward now into fiscal 26, what's the guidance?
They're guiding for net bookings between $7.6 billion and $8 billion. So that's growth of about 3% to 9% year over year.
Okay, decent growth projected. But you mentioned headwinds earlier.
Yeah, they did flag a couple things. They expect some pressure from their older catalog titles and also from Apex Legends in FY26.
All right, let's break that down a bit, starting with EA Sports FC. You said it rebounded strongly in Q4. What caused the earlier slowdown in Q3?
Well, it seems like a couple of things were going on. There was some, post-World Cup fatigue selling in, plus the whole rebrand from FIFA to FC. That probably caused a bit of friction, maybe slowed down players moving over initially.
Makes sense. So the January update was the key.
It really sounds like it. They called it their biggest live service update ever. Focused on making the gameplay faster, tuning the rewards. The community feedback was apparently really positive.
And they pushed marketing too, right? To get people onto the new title.
Yeah, personalized stuff to encourage players who were still on the older title to migrate over. Seems like that combination worked.
And FC Mobile.
Yeah.
How's that playing out?
Still doing really well. Growing engagement, bringing in new players, especially strong in places like the Middle East and Southeast Asia. It's interesting because those aren't their biggest console markets, so it shows real expansion.
Right, broadening the global reach. Now, that American football number, 70% growth, needs a closer look. How do they achieve that?
It's about building that whole ecosystem, double-digit growth in players and playtime across both Madden NFL and the college football game.
And keeping people engaged even outside the main season.
Exactly. Things like the NFL draft event helped maintain interest. Their goal seems pretty clear. Build the single biggest digital platform for American football fans. Combining NFL and college seems to be key to that.
Okay, shifting gears to The Sims. 30% growth in Q4. Was that just the 25th anniversary hype?
The anniversary definitely helps stir up interest, but they also backed it up with new content like the businesses and hobbies expansion. They brought back some stuff from Sims 1 and 2, introduced creator-made kits. It was a mix of nostalgia and newness that really clicked.
A well-executed plan then. And Split Fiction, nearly 4 million units. What's the story there? Just good gameplay.
Seems like it. They highlighted it as an example of, shared experiences and compelling gameplay finding an audience. A good sign that new IP can still break through.
So for FY26 growth, beyond these established hits, what are the big bets?
The big launches they're pointing to are Skate and Battlefield, both positioned as live services.
Battlefield coming back as a live service. How are they approaching that?
They talked about a modern player-first approach, using feedback from things like Battlefield Labs, which they're actually expanding into Asia now. Sounds like they're trying to get community buy-in early.
So growth expected from EA Sports, Sims, Battlefield, Skate. But let's circle back to those headwinds. You mentioned catalog and Apex.
Right. So about 1 point of headwind from foreign exchange. But the bigger chunk, around 5 points, is expected from catalog and Apex Legends.
Why the drag from catalog?
It sounds like a strategic shift. They're focusing more resources on these huge online communities, like in their sports games, and also on select big blockbuster storytelling games. So older titles in the catalog might get less focus, leading to a near-term dip.
And Apex Legends,
Yeah.
a 40% decline projected. That sounds steep.
It does. They expect a 40% year-over-year drop in Apex net bookings for FY26, with it hitting harder in the first half. It might signal less investment there as they prioritize other things, or maybe increased competition playing a role, too. It's a significant pullback.
Okay, a deliberate pivot, it seems. Let's touch on the financials beyond bookings. Anything else noteworthy from FY25?
Yeah, a few things. Gross margin actually improved, mainly because licensing fees were lower. Operating expenses ticked up a bit, mostly people costs.
And cash flow, shareholder returns.
Very strong operating cash flow and free cash flow in FY25. And they were active returning capital share buybacks, and dividends were significant.
And the outlook on that front for FY26?
They gave the usual guidance: net revenue, OPEX, margins, EPS, and they reiterated their longer-term financial framework through FY27. They're still banking on live services, new games, the 26 World Cup, and EA Sports FC hitting another milestone to drive margins.
Commitment to returning cash still there?
Yep, still committed to returning at least 80% of free cash flow to stockholders in FY26.
What about the very near term? Q1 FY26.
Q1 guidance is a bit soft, ranging from down 7% to up 1% year over year on net bookings. That's pretty typical seasonality for EA Sports, though.
Right, the summer lull before the big sports launches.
Exactly. And they expect those Apex and catalog headwinds to continue in Q1 and Q2. Growth should pick up in the back half of the year, driven by sports seasonality and hopefully the Battlefield launch.
But FCC is starting Q1 strong.
They did mention positive momentum for EA Sports FC bookings early in Q1, which is a good sign.
Strategically then, summarizing their focus going forward.
It really boils down to live services, big new game launches, and building those global fan communities. They also talked quite a bit about AI, using it to boost creativity, innovation, connect with players better.
Interesting. Any specific ambitions mentioned?
Yeah, they want The Sims to become a major platform for creators, user-generated content. And they see huge long-term potential in football, both global and American. They think the growth of the real sports creates a multiplier effect for their games.
And integrating Madden and college football more.
Definitely. Creating a more unified online community there is a big goal. And the 2026 World Cup in North America, they see that as a massive player acquisition opportunity for the global football side. Plus, continued investment in the EA Sports app itself.
How are they viewing the competition in the market right now?
They acknowledge things are dynamic, the macro environment isn't perfect, but they feel good about gaming's resilience, especially their big franchises. They also touched on pricing models evolving, emphasizing value.
Did they mention competitors' delays? Like, GTA?
They didn't name names, but they did comment on a major expected industry release moving out of fiscal 26. They said that gives them more clarity and confidence for their Battlefield launch window within FY26.
Ah, okay. So they expect good operating leverage in FY26. Why?
Yeah, they highlighted that. It's driven by scaling up big IPs like Battlefield and Skate, high digital PC penetration, which usually means better margins, and just keeping costs in check.
And Battlefield's development costs are mostly sunk already.
Essentially, yes. Those costs have been absorbed over years. So when the revenue starts flowing from the launch, a much larger chunk should drop to the bottom line. That's the leverage they're talking about.
It makes sense. One quick thing on marketing Madden versus college football. Are they bundling again?
Sounds like it. They mentioned the success of the MVP bundle last year for fans of both, and indicated they'll offer similar ways for players to engage across both games. It's all about building that single, huge American football community.
And finally, the 2026 World Cup. Just how big is that opportunity?
Historically, World Cups have been huge for player acquisition and engagement for them. They mentioned seeing player base growth of like 50% in North America during a past World Cup year.
And this one's in North America.
Exactly. So huge potential there. And they stressed mobile's importance too for reaching fans globally during the event, even outside the host countries.
Okay, great breakdown. Let's shift gears now to our This Is Not Financial Advice segment. Based on everything we've just discussed about EA, what's an outrageous but plausible trade idea you've cooked up?
All right, here's one for you to mull over. It's definitely playing the long game, focusing on that FY26 outlook. What about a long position in EA, specifically betting heavily on the Battlefield launch hitting big in the second half of fiscal 26?
Okay, betting on the Battlefield comeback. Why is that outrageous and plausible?
Well, It's outrageous because Battlefield has had, let's say, a mixed track record recently, and we just talked about the Apex and catalog headwinds. But it's plausible because the positive signals from Battlefield Labs testing could indicate they've finally got the formula right this time.
So pent-up demand meets a potentially good game.
Exactly. If Battlefield really delivers a compelling live service experience, it could massively outperform the current, perhaps somewhat cautious expectations, especially given the operating leverage we discussed. You could even think about using, say, longer-dated call options to leverage that potential upside around the launch timeframe.
So the bet is that Battlefield's success outweighs the known headwind.
Precisely. High risk, potential for high reward if they nail the execution.
Interesting. How about another one? Maybe something playing on those regional strengths.
Okay, here's a different angle, maybe a pairs trade. Thinking about FC Mobile's strength, especially in the Middle East and Southeast Asia.
Right, you highlighted those regions.
So, what if you went long on companies that are pure plays or heavily exposed to mobile gaming growth, specifically in those regions? Companies really benefiting from that infrastructure build-out and user adoption.
Okay, long mobile gaming in ME and SEA, and the short side.
You could pair that by shorting traditional brick-and-mortar video game retailers, particularly those maybe more reliant on console physical sales in Western markets. The rationale being EA's own focus highlights the ongoing shift to digital and mobile, potentially squeezing those older retail models further.
So betting on the geographic and platform shift highlighted in EA's strategy.
Yeah, it's a play on those broader industry trends that EA's results seem to be reflecting. Mobile growth in emerging markets versus pressure on traditional retail.
Got it. Two very different thought-provoking ideas there. And just to reiterate for everyone listening.
Absolutely. These are just speculative ideas based on the call, definitely not financial advice. Please, do your own homework, your own due diligence.
Couldn't agree more. So that wraps up our deep dive into the Electronic Arts Q4 and FY25 earnings, a strong finish led by sports, sims, and a surprise hit with a clear strategy focused on live services and key launches like Battlefield for FY26, despite some headwinds.
A lot to track there for sure.
Thanks for tuning in to Talk Tickers. We hope this breakdown was useful. Keep digging, keep questioning, and we'll catch you on the next one.